Hi, and welcome to the latest episode of the PRT Pod. Today we're going to be talking about the Flow relaunch. I'm joined here today with Fiona Jaffrey, or as of last week, Fiona Tripp, and Daniel Parker. Welcome to the episode. Would you like to give some introductions to yourselves, please? Fiona?
Yes, Fiona Jaffrey. I'm a pricing strategy director at Legal & General. I've been here for about 5.5 years and currently heavily involved in the development of our flow proposition.
Thanks, Fiona. And Danny?
Hi, Daniel Parker, transition manager. I deal with the post-sale schemes moving from buy-in to buyout, and I've been heavily involved in supporting Fiona in the development of the flow proposition.
Great, thanks, and thanks for being here. So we'll get straight into it. Can you give us a summary of what the flow proposition is and what led to the creation of it?
Sure. So over the past couple of years, we've seen a huge spike in demand for PRT transactions, and that's across schemes of all sizes. And at L&G, we very much wanted to remain a whole of market provider, but we realised that to continue in the smaller scheme space, we needed to streamline our approach to smaller schemes, and that's where Project Flow came from. So really, it's looking to streamline and automate as much of the processes as possible, both pre-sale and post-sale. And the backbone of a lot of those efficiencies is our flow template, which means we get the data in the same format every time. The validations are run on the data before it gets to us, and all the benefits in there we know that we can price and administer with no manual interventions needed. We typically say that flow works for schemes between 20 and 150 million, but worth noting they're both soft limits. We do quote on lots of schemes below 20 million if we've got capacity, and if a scheme larger than 150 million wanted a flow slot, we would happily do so. Flow gives these smaller schemes access to guaranteed and transactable pricing, and it also comes with a flexible post-sale framework where schemes get to choose the data cleansing period that works for them. So overall, Legal & General want to remain a whole of market provider. In 2023, 2/3 of our total schemes were small schemes, which shows our commitment to that area of the market.
That's great. And as you say, the demand in the market has increased, and we've talked about it on various of our episodes. How does Flow meet that, the need of the smaller schemes?
Yeah, I think there's a couple of key points of Flow to pull out. The first is that we have designed it to be a truly end-to-end proposition. So it very much starts with schemes coming to the market. We've designed a simple triage checklist that enables us to make a quick decision on whether or not we can quote. And it's also transparent in letting schemes know what kind of factors we look at in making that decision. And it supports schemes all the way through to buyout. So it's not just a proposition to get a transaction done, it's to support you all the way through to the end of the data cleanse as well.
And you mentioned the triage checklist. What kind of things would you look out for on there?
So it's a really high-level checklist. We just need to know things like the size of the scheme. Do they have any assets with Legal & General asset management? What kind of timescales are they looking for? And obviously, most importantly, will it fit into the flow template?
And Danny, do you have anything to add from a post-sale perspective?
It's probably just to reassure the market that no matter what size the scheme is, that each scheme will receive a dedicated point of contact and a comprehensive level of service across the whole transition.
So it really streamlines the process from start to even through to post-sale. Could you sort of briefly describe the steps in the flow process?
Yeah, sure. We've touched on the first one already, which is the triage checklist. Probably worth throwing out some of those, the factors on there. So we do prioritise sole insurer cases and cases with asset management assets. But as we open up capacity and more pricing slots, we do expect to be able to quote on more traditional multi-insurer auction processes. The second step after the pricing slot is confirmed is a slightly new one, which is where we want to get to know the scheme a little bit better before a transaction happens. And this is based on feedback that if we do a bit more of that work up front, you get a much smoother onboarding and transition journey. So we've designed a very simple pre-sale questionnaire for the scheme's administrators to fill in. An example of what's included on that are questions around how many transfer value and retirement quotes do they do in a month? Do they have a backlog? What will they do in the run-up to the transaction? And that's how our quotes team is lined up to know, are they going to get an extra 5 quotes, 10 quotes a month? And it can just be a really seamless transition. Once we've received the completed flow template, we will price it up in a monthly pricing slot, and we will deliver a guaranteed price alongside all of the documentation you need for a transaction to be executed. So if the pricing works, you can typically execute within about 3 to 4 weeks of us delivering that price. Then post-transaction, as I've mentioned before, the schemes can choose the data cleansing timescale that works for them. So we think this gives schemes the best possible opportunity to meet the deadlines. They can tell us if they'll be done in 12 months, 36 months, somewhere in between, and we can make sure we've got the resource lined up to deal with it when they do provide the final data. And on the final data, we've had feedback that can be a painful bit of the process sometimes, with lots of iterations and queries, but we've designed our flow template to have cleansed data included in it, and for the schemes advisors to be able to run the validations before it comes to us, so they can look at any validations that are flagged and kind of send it alongside explanations, which should hopefully reduce the number of iterations and queries we have to go through to get to that final data and for the schemes to ultimately get to buyout.
So not too much going back and forth. They sort of know from the outset these are the kind of questions that L&G are looking for, like will be asking about this data, and can provide that information up front.
Exactly. If we get a list of validations that have failed along with explanations of why they failed, then hopefully we can cut down that back and forth, as you say.
Yeah. You mentioned the data cleanse, this 12 to 36 month window, and I guess, Danny, this is where you come in. What does that process look like on your side?
Yeah, as Fiona's already touched on, the flow proposition gives schemes and trustees that flexibility to liaise with us and have that two-way conversation of agreeing a data cleanse period. As you can imagine, depending on what items the scheme have to undertake during data cleanse, that might look like a 6-month window, a 12-month window, a 24-month window. And obviously having that open and honest two-way conversation means that we can plan from a post-sale transaction point of view of working to meet the client's needs. Obviously, we know if schemes are eager to go to buyout quickly and their data is in a good shape, we can factor that into our timescales and project plans to meet the needs of those clients. And obviously, if schemes want a longer data cleanse window, we can factor that in to ensure that everyone has a smooth transition.
I know we've done sort of 35 cases. I think I was involved in one of the first cases we did within the team on the pricing side. And I know the proposition has developed quite a lot since then. Could you tell us a bit how we've sort of adapted the feedback we've received on these cases, and how flow has changed over time, and what we've improved?
Yeah, as you say, we've written about 35 flow transactions to date. The first one signed the middle of 2022. So we've had 2 years of feedback that we've been able to incorporate into the design of the flow relaunch. Some of the things that we've had really positive feedback on that won't change are things like the template. So we've had really positive feedback on the range of benefits and the number of schemes that can fit in. We have undertaken a review of that and added even more benefits in, which we can now price, and we'll keep that under review and keep expanding it where we can. Another area that we've had really positive feedback on is the lock and novation process that we're able to offer for asset management clients. So we're able to lock to most PMC unit funds as they are, so the scheme doesn't need to do anything for the price lock. And then at the end of the lock, the trustees can sign a deed of novation, which essentially transfers the ownership of the units over to us. And that's a really seamless execution of that part of the process. I think a couple of areas where we've had to work on for the relaunch. The first is around our clarity around our appetite and timescales. I think it hasn't always been clear to the consultancies that we work with what our appetite is for flow and which cases we may or may not quote on, which is why we've developed this triage checklist to hopefully add a bit more transparency around that. Another area that we kind of took on board feedback for was the idea of an upfront data cleanse. So one of the early ideas we had for flow was for schemes to do all of their data cleansing pre-transaction, come to us, and then you could get to buyout within a couple of months. And while we still think that is a good idea, I think based on feedback and the capacity issues with third-party administrators, the time it will take to do that cleansing, and obviously the risk that pricing can move away from schemes over that period, we've accepted that it's not realistic for where the market is at this point in time. So that's no longer a requirement or something that we're exploring for flow. I think lastly, another area that we've worked on is around being clear on sole insurer processes and whether that is or isn't a requirement. And it's something that we will always prioritise. And if we can fill all of our pricing slots with sole insurer processes, then we will. But we expect as capacity increases, then there will be more multi-insurer processes under Flow.
Great. And Danny, what feedback have you seen on the post-sale side on this?
I think probably following on from what Fiona said, demonstrating our appetite across the whole of market. We've recently written probably one of the smaller schemes we've written of just 6 members a few months ago, and that scheme went through the data template, ironed out 1 or 2 data validation points which are outstanding, and is already in final costing. So in the space of 2 to 3 months, that scheme signed with us and is already looking to move to buyout.
Great, thanks guys. And sort of moving on, what are the future plans for Flow? Where do you see it evolving to next?
Yeah, so I think there's still a lot more that we want to do with Flow after this relaunch. So the first one is increasing our pricing capacity. We're saying that we're doing this in a sustainable way. So we're not going to write more new business of small schemes until we're confident that all our post-sale teams can deal with that with no impact on customer experiences. We're also looking to build out price monitoring capacity and also being able to offer indicative quotes for schemes who might not be as confident in their funding level to go straight for a guaranteed transaction. We'll continue to work on the Flow template and to increase the benefits that fit in there as we can. And we'll also look to work on the size range, so dropping that 20 million lower limit down to an official limit of, say, 10 million as we open up capacity. We are going to continue working with asset management to see how we can support them and their clients on their end game journey. And we will continue to commit to small schemes and how we can help them. We've got a number of handouts, websites, articles coming up all around Flow and how we can support smaller schemes.
Great, thanks. And Danny, do you have anything to add about the future of Flow?
Yeah, I suppose from a post-sale transaction point of view, it's just reassuring everyone that all small schemes across the whole proposition, as well as large schemes, receive the same commitment and the same dedication from a post-sale perspective. So each scheme, small or large, gets a dedicated point of contact. So again, it's just that reassurance that even if you are a Flow customer, you still receive that level of detail from us.
Yeah, still continuing that sort of gold standard of service.
Yes,
that
correct.
we
Because we pride ourselves on our service standard, and all the members of any scheme are eventually going to become legal and general members. So even from that point, from signing the scheme, we treat those people as L&G members.
Great, thanks. And do you guys have any sort of, just to bring this to a close, any ending thoughts that you'd like to share with our audience?
I think just to say, if anyone's got any questions on Flow or wants to find out more, please feel free to get in touch with myself, Danny, or your usual legal and general contact. And just to say as well, there is a second podcast episode coming out soon, which will be with some of our asset management colleagues, where we'll delve into the Flow proposition in a bit more detail.
So just once more for our listeners, that's Fiona Tripp and Daniel Parker, if you need more information on the Flow proposition. And please join us for part 2, where we'll be discussing the Flow proposition and how it's advantageous to our asset management clients. Thank you for listening. I'm Roshni Sakaria, and this is the PRT Pod.